What's up, guys? I'm Nobody Special, and we've got another good morning going on in silver right now. Somebody, probably one of the big banks, is loading up on shiny. As of the making of this video, silver is up about 1.25% right now. This is a few days in a row. We've had a very good run, and it has a lot of people wondering, is there another price smash right around the corner, or is this the beginnings of a much bigger move in silver? I mean, those inventory counts are getting low over at the Comex. So what is it? Well, we're going to take a look at one very simple technical indicator that I'm watching for and one price level in particular that we're very close to before I make any moves. You ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm Nobody Special. And if there's one thing I love in the morning, besides the smell of my cup of coffee, it's that big giant green candle on the silver charts. And we got that again this morning. Someone's loading up on silver. Everybody's saying it's probably B of A covering their shorts. We don't know who it is exactly, but someone's loading up on the shiny. Those inventory stocks are getting lower and lower. Price is moving in the right direction. So I can understand the urge to FOMO in. But if there's one thing I learned in 2021 is that is an easy way to get yourself burned, especially if you're investing in silver derivatives like mining stocks or some of the mining ETFs. But at the same time, after watching for so long, it would be a shame to miss out on the big move in silver now. So what's going on? What could it be? Well, there's one very simple technical indicator that I'm watching right now. We're very close to it, and I'm not going to make any moves until I see us get above that and hold. Now, before we get into the numbers, folks, I have to ask, could you please like this video, subscribe to my channel, and don't forget that notification bell. It really helps me out, and I'd be forever in your debt. And I also have to do one very big CY my A here, folks. I am not a financial advisor. This is not financial advice. This is just financial edutainment. I want you to do your own research, your own DD, arrive at a decision that's right for you. And also, I know some of you guys are really good at technical analysis out there, so please let me know down in the comments what you're watching, or have you already piled in? I know some of you guys are very accomplished metals traders, and I love to get your opinions. It makes the whole channel better for everybody. And now with that, it is that wonderful time where we shrink my big fat melon of a head, and let's look at charts. We just love charts today. And look at those big, beautiful green candles on the silver chart. Again, this is just as good as the smell of coffee in the morning. Silver right now up about 1.25%. Somebody at 8 a.m. Eastern time, right on the money, started loading up. My guess is this is someone at one of the trading desks at one of the banks, got in, sat down at his desk. They all had their morning meeting and said, we're running up silver today, folks. And that is exactly what they've done. This is a couple days in a row now. I'm going to zoom out on this chart. And, well, look at that. It's been a pretty good week for silver, hasn't it? Now, I understand the propensity to want to FOMO in. So what's going on right now? Are we about to see another price smash? Are we about to break out even higher? Well, first of all, let me preface everything by saying silver and precious metal markets are not free and fair in open markets. The bankers can do whatever they want, whenever they want, and the regulators allow them to do it because the fines and the penalties are less than the proceeds of that trade. And so really, it's not illegal for them to manipulate prices because the profits are bigger than the fines. So really, it's just the cost of doing business. So you have to remember that that could happen at any moment. At any moment, the bankers could just decide they're going to smash the price down. So keep that in the back of your mind. Now, we are approaching a technical level that I like to watch. It's one of the most important ones, and that is the simple moving averages, in particular the 50-day and the 200-day. And we are right now right around the 200-day. And I want to show you this chart here because this is the one that I am watching the most. And this is off of Yahoo Finance. And you can see the red line here. This is your 200-day moving average. And the purple line is your 50-day moving average. And folks, we are right just below that 200-day simple moving average, which is right now somewhere around 24.67, 24.70. That is the level that I'm watching closely. And you'll notice back in November, the last time we had a nice run like this in silver, we butted right up against that line and we failed and the price smashed and down, down, down we went. So again, there are much more sophisticated technical analysis methods that are out there. I've seen Bollinger Bands, Fibonacci retracements, right? All kind of fancy math. Honestly, in most cases, the simple moving averages will give you most of the information you need. Obviously, there's a lot more to technical analysis than that, but if you're just getting started, get used to looking at those 50-day and those 200-day moving averages. And again, I just want to back you up a little bit. If you were using the 200-day moving average as your indicator, then you could go all the way back here and you could say we broke below the 200-day in July of last year, and that would have been a good mark to exit. Save yourself a lot of pain and a lot of time spent down here in the doldrums over the fall. And coincidentally, you saw we broke down below it. We retested. We failed to retest twice. Again, that was a good indicator that there was some pain ahead, and that's exactly what happened. So what am I looking for? I am looking for a close above this red line, and I'd like to see a retest and a move higher before I pile into any silver derivatives, any mining stocks, anything like that. Now, the one thing I want to throw out there is to remind you guys that I tend to compartmentalize my money. I make regular purchases of cryptocurrency and of precious metals, physical precious metals. I treat that like a bill that has to be paid every month. I dollar cost average in, and I don't try to time markets and guess prices. I just do that on the regular. That is me paying myself. I do that no matter what. This is me talking from my brokerage account where I'm trying to time markets and trying to make a trade. I have different compartments, and I treat my money differently depending on which compartment I'm operating in. And of course, I have my third compartment. That's my 401k, my retirement. I don't do any trading in there. I just rebalance that once a year. That's all I do over there. So again, just to reiterate, right now, it looks like 2467 is the number I'm watching. I want to see us break above 2467, retest that level, and hold it. And that's when I would consider it safe to try to trade in silver. Now, again, CYMIA, not a financial advisor. This is not financial advice. Do your own research, all that stuff. What am I looking to do for a trade? Number one, I am not touching SLV. I have a ethical and moral disgust for that ETF. I believe that is used as a mechanism for abusing markets, for ripping off retail traders. I don't go near SLV, but I am looking at a leveraged way, if we break above this level, to invest in the silver trade. And my two favorite ETFs for that are SIL and SILJ, and that is your Global X Silver Miners ETF, shown here in this chart, and your ETFMG Prime Junior Silver Miners ETF, shown in this chart. Now, you're going to notice we had some similar technical behavior, and it makes sense. The miners track the metal, where we failed to break out above the 200-day moving average, and this was back in November. This is looking at the SIL chart, and this is looking at the SILJ chart. Again, the same thing. That 200-day line held right about the same time that the metal failed to break out above its 200-day moving average. Now, you'll notice right now the metal is right here pushing the 200-day moving average, but the miners are still way, way behind. And I know a lot of traders see that as a bad sign. They like to see a move in the metal to be confirmed by a move in the miners. Although, to be honest, right now, looking at the chart in the metal versus the chart in the miners, if I see that breakout above the 200 line and a successful retest, that tells me the miners are way, way undervalued and that they are going to very rapidly play catch up to the metal. So that's another way you could look at it. And lastly, I just want to mention that one of the reasons why I think this is happening, I think the banks are going to let the price run a little bit. And again, I have to send a shout out to my man Ditch the Deep State over at Wall Street Silver. What an asset his research is to this group. And he's been sharing this chart lately. And this line in red here is what I want to draw your attention to. And this is the number of new silver contracts that have been issued since first delivery notice on these January contracts. And the reason why this is important is because when new contracts get issued after notice of first delivery, they're almost always delivered on. These are people who intend to take physical delivery of the metal. And if you look at all these other lines on this chart, you can see right now this January is well above any of your most recent months as far as the number of new contracts issued after first delivery notice. And that number is still going up. So somebody out there is intending to take delivery on a lot of metal. This is showing a few hundred contracts have been issued. And again, each one of these contracts represents 5,000 troy ounces. So there is a run on physical metal going on at the Comex right now. And if we scroll down and ditch the Deep State's most recent post, we get to this chart that shows we are at 81.163 million ounces in registered at the Comex. Now, that number has not updated in a couple of days. That's interesting. Why is the CME group not updating their registered count? Maybe they don't want to show us how much metal is really in the vault and how much is flowing out of the vault. So keep an eye on that. There may be a big downtick coming in that in the next couple of days. I'm not sure what's going on. But that might be why the price is running up right now, is because the people at the Comex know that someone is buying up the silver and they don't want to release their inventory counts because they know the price is going to run when that happens. Now, that is pure speculation on my part, but I like to imagine what's going on in the heads of these bankers when they're doing what they're doing. So here you can see 81.16 million ounces as of January 18th. That number has not updated in a couple of days, and there's still that 272 million ounces in the eligible category. Now, again, as the price rises, you're going to see metal tempted to come from eligible back over into registered as more metal goes up for sale, as people intend to cash out. But for right now, the inventory counts continue to go down. That means the price is too low. People are gobbling up the physical. The supply is going to have to increase. You're going to have to see metal moving from eligible to registered in order to put any downward pressure on that prices. And right now, all the pressure is upward. And with all of these new contracts being issued after first delivery notice, that tells me there's more downward pressure in that registered number right now. So these inventory counts are probably heading lower, which means the price is going to have to keep heading higher. We're not going to see the price slow down, in my opinion, until we see a big chunk of that eligible metal moving over into the registered category. And I just have to tell you, that eligible metal, don't consider that Comex inventory, that most of that eligible metal is owned by somebody, either wealthy individuals or ETFs. All right, so it's not like that is all your silver market. For right now, the float in the silver market is 81.1 million ounces. That's it. And we've still got that monster in the room, that huge short position over at Bank of America that has to be covered. That is one very big variable that's still out there. So long story short, yes, it's exciting to see silver prices going up. However, we've been here before. It was just a few months ago that we ran right up against that 200-day moving average and failed to overtake it, and the metal crashed lower and lower from there. So again, not a financial advisor. This is just my personal approach. I'm watching that important 2467 level. I want to see us break above that, retest, and then move higher before I get into any silver derivatives. And that is in addition to my regular dollar cost averaging into physical that I do anyway. I pay myself first. I just consider that a bill that has to be paid. And also, folks, I want to remind you that we still have this big market sell-off that is on the horizon. It could be anywhere from 6 months to a year and a half away. When that happens, I think everything, including precious metals, is going much, much lower. So keep that in mind, that that is still out there. Again, not a financial advisor. Do your own research, your own DD, arrive at a decision that is right for you. Guys, I want to thank you for your time. Thank you for watching this video. Don't forget to give me a thumbs up, subscribe to my channel, hit that notification bell. And again, let me know down in the comments, what do you think? Is my 2467 number right? Are you watching some other indicator? Is there something I'm missing? Let me know down in the comments. I'd love to hear from you guys. And until next time, live small and dream big.